Have you ever felt like, you're just constantly playing catch up, especially with something like crypto that moves so incredibly fast?
Oh, absolutely. It feels like a full-time job just keeping track.
Right. You read the headlines, you try to stay informed, but deep down you feel like there must be a smarter way, a way to get a real edge.
Uh-huh.
So today we're going to cut through all that noise. We're not just talking about chailing or, chasing the latest hype coin.
No, definitely not.
Our mission for this deep dive is really to pull out the most actionable, the most game-changing strategies that the pros are actually using. Stuff to build serious crypto wealth by 2025.
Think of it like getting the inside track.
Exactly. Your shortcut to being genuinely well-informed.
And it's so timely, isn't it? The crypto space isn't just evolving, it's morphing right in front of us.
Totally.
And while loads of investors are still looking at the obvious stuff, the real lasting opportunities, the kind that build actual wealth, they're often hiding in plain sight, using less obvious strategies. What we've dug into here in our research are some very specific methods, things the smart money is already doing.
And we're going to lay them out.
We are. You're about to hear exactly what they are.
Okay, let's unpack this then. The first secret. It involves something that sounds kind of simple, but it's really powerful for understanding the market. It's about following the whales, not the noise.
All right, the whales.
And by whales, we mean the really big players, the investors with such deep pockets that their moves don't just follow the market. Sometimes they create the market moves.
Yeah, that's the key distinction. They're market makers, not just takers.
So how does one,
Yeah.
follow them? Is it legal?
Haha, yeah, totally legal. And what's truly fascinating now is how on-chain data makes this possible. It used to be insider info, right?
Yep.
Whispers.
Mm-hmm.
Now, tools like Whale Stats, Look On-Chain, Arkham Intelligence, it's almost like having X-ray vision into their crypto wallets.
Oh, okay.
You can see them quietly buying up tokens, moving assets around. It's this incredible level of transparency.
So you can actually see them accumulating.
Yes. And the pro tip from the research is this. If you see these big wallets quietly loading up on some low-cap token, that doesn't mean you ape in blindly.
Right, research first.
Exactly. That's your signal to do your own deep dive. It's an early indicator that something interesting might be brewing.
Okay, that makes sense. You're using your activity as a research prompt.
Precisely. It democratizes information that used to be locked away.
All right, moving on. This next one. I gotta admit, when I first read about airdrop farming, it sounded, well, like a myth. Free money.
It does sound a bit like that, doesn't it? Almost too good to be true.
Yeah, but here's where it gets really interesting. Our sources are clear. People genuinely made thousands, sometimes tens of thousands of dollars in 2023, 2024, just by using stuff like dApps or testnets.
Yeah, it's not quite free in the sense of zero effort, but it's close. The mechanics basically involve being an early and active user of new protocols.
Okay, so what does active user mean?
It means things like using their testnets, those are like the beta versions, bridging assets, maybe providing some liquidity, interacting consistently.
Ah, so you're helping them test and build network effects early on.
Exactly. And the protocols reward you for that early participation and risk. We saw huge ones.
Right.
ARB from Arbitrum, Twin from Blast. People got significant payouts.
And there are more potentially coming.
That's what the research suggests. Eyes are on projects like ZK Sync. That ZK drop is incoming, also Layer 0, Scroll. These are still relatively early.
So the opportunity is still there if you're willing to put in the effort to interact.
Yes, it requires consistent engagement, not just a quick click. But the potential upside, it can be substantial. It raises that question, though. How do you spot these before everyone else?
Well, always the challenge.
Yeah.
Okay, let's talk about another big area, something tackling a real pain point. Ethereum gas fees. They can be brutal.
About it.
So the next strategy is about layer 2s exploding.
Yeah, layer 2s are crucial. Think of Ethereum as this super busy main road, constantly jammed.
Yeah. Good analogy. Expensive coals, too.
Exactly. Layer 2s are like building super fast, super cheap express lanes alongside it. They scale Ethereum.
Making things usable, basically.
Usable and affordable. And because they're newer, they're full of early opportunities themselves. New apps, new tokens being built.
For which ones are getting the most attention?
Well, the research highlights a few key ones to watch. Arbitrum, Optimism, Base, and ZK Sync are definitely top of the list right now.
And the idea is that coins and projects built on these layer 2s, that's where a lot of future growth is.
That's very much the narrative. They're presented as the future infrastructure. So getting familiar with them, doing your research early, It's pretty critical.
Okay, this next one feels like we're jumping into sci-fi territory. The fourth secret, using AI to predict the next 100x coin.
Right. It sounds futuristic, but the tech is here now.
So this isn't just hype. AI can actually help find promising crypto.
Well, it's about leveraging AI to process vast amounts of data incredibly quickly, way faster than any human could.
What kind of data are we talking about?
Oh, everything. Market sentiment from social media, news, chart patterns, trading volumes, developer activity, and crucially, that on-chain data we talked about, like whale movements.
So AI tools are scanning all of this in real time.
Exactly. Tools mentioned in the research include things like Token Metrics, Lunar Crush, CryptoGPT. They're designed specifically for this.
And the claim is, what? That this gives you an edge.
A serious edge, according to the source material. The combination AI plus on-chain data, it allows for spotting patterns and potential breakouts that you'd likely miss otherwise.
Interesting. Merging cutting-edge tech with market analysis.
Precisely. It's about augmenting your research, not replacing it entirely, but giving you powerful insights.
All right, let's shift gears a bit. Finding reliable income in crypto can feel treacherous. Lots of scams, unsustainable yields.
Definitely. The DeFi space has its pitfalls.
But this next strategy, real yield DeFi, passive income, seems to offer something different, something more sustainable.
Yes, and that's the key word, sustainable. What's fascinating here is the move away from those crazy high APYs that were obviously too good to last.
Those often relied on just printing more tokens, right?
Exactly. What the research calls Ponzi tokenomics. The yield came from new money, not actual economic activity. It always collapses.
So real yield is different how?
It means the yield, the passive income, comes from actual revenue generated by the protocol. Things like trading fees, borrowing, lending interest, fees from minting stablecoins, real usage.
Okay, so the platform is actually making money, and it shares that with token holders or liquidity providers.
That's the core concept. The research points to examples like GMX, which is a perpetuals exchange, Pendle for yield trading, and Athena with its synthetic dollar.
So these are platforms rewarding users based on the platform's actual success and usage.
Correct. It's a much healthier, long-term model. A shift towards rewarding genuine participation.
Got it. Okay, strategy number 6 sounds fundamental. Owning your Web3 identity. What does that even mean? My wallet address.
Sort of, yeah. It's the idea that your wallet address, or rather a user-friendly name linked to it, becomes your universal username for the decentralized web.
Like my handle on Twitter, but for everything Web3.
Kind of, yeah. Think about getting a .eth name, like yourname.eth or a .crypto domain. The sources describe it as building digital land.
Digital land.
Yeah.
Okay. Why does that matter for me, the listener?
Well, several reasons. First, brand identity online. Second, there's a certain Daijin clout, as the community calls it.
Street cred for being early.
Basically, yes.
Yeah.
Recognition for being savvy, but also real investment value.
How so?
The analogy used is powerful, just like early .com domain names became incredibly valuable.
Okay. These unique Web3 identifiers could become rare, sought-after assets as Web3 grows.
That's the bet. Owning your digital identity early could pay off significantly down the line.
Okay, fascinating. And that brings us to the final strategy, something that sounds like classic investment wisdom. Buy the blood, not the pump.
Timeless advice, really. Applies everywhere, but maybe especially in crypto, given the volatility.
So translate that for crypto cycles.
It means the real money, the serious wealth generation, often happens when things look bleakest. During the fear of the bear market.
When prices are crashing and everyone's panicking.
Exactly. That's when you should be researching, accumulating positions strategically, quietly, buying the blood in the streets, so to speak.
And
then you ideally take profits or cash out during the mania phase, the bull run, when everyone else is piling in, chasing the pump.
It's counterintuitive to human nature, isn't it?
Very. It requires discipline. The research even quotes Warren Buffett's golden rule. Be fearful when others are greedy and greedy when others are fearful.
So it's about trusting the cycle, having a long-term view, and not getting swept up in the short-term emotion.
Absolutely. It highlights the importance of investor psychology and, well, market timing, or at least timing your entries and exits based on cycles, not hype.
Wow. Okay. We've covered a lot of ground. 7 distinct strategies. So wrapping this up, what's the big takeaway for you, the listener?
I think the core message that comes through loud and clear from all this research is that building serious wealth in crypto isn't really about luck.
Yeah, it's not hitting the jackpot on a meme coin.
Right. It's about knowledge, it's about timing, understanding those cycles, and it's about consistency, discipline.
And just by understanding these 7 strategies we've discussed, following whales, airdrop farming, layer 2s, AI tools, real yield, Web3 identity, buying the blood, you're already way ahead of the curve.
Miles ahead of people just chasing pumps or following random influencers. You're starting to think like the smart money.
Definitely food for thought.
And maybe a final thought to leave you with. If all these successful strategies seem to point towards deep research, patience, and long-term thinking, rather than just chasing quick, hyped-up gains,
Uh-huh.
how might that change your definition of what success actually looks like in crypto? Maybe it's less about overnight riches and more about strategic, informed participation over time.
That's a great question to ponder. Which of these resonates most with your own style, your own approach? Something to think about.